Hey everyone, welcome to the KE Report, another daily editorial. And today, Tuesday, May 27th, we are chatting with Dave Erfle, founder and editor of the Junior Miner Junky. Hope everyone down in the US had a very nice Memorial Day break. And now, shortened trading week, we get to talk. Let's just talk early day action here on Tuesday. Gold is fading. Silver is also down a little bit. We're seeing the US broad averages. Those are moving higher. It's a pretty good day for the markets as we are seeing a little bit of rotation out of, I guess, the safe haven plays or that inverse correlation we've seen between US markets and the precious metals. However, looking at the gold and silver stocks, I'm still seeing a decent amount of action in even the juniors today. GDX is down about 1% to 1.5%. Not much when you consider gold is down. It was down about $75 earlier today. And the juniors continuing to lead. We're continuing to see financings announced and a lot of money coming out of the sector. So, Dave, what's your takeaway from how we're starting this week?
Yeah, this is bullish action. When you see higher risk juniors leading and getting market share here, while the gold price, like you said, was down $75 at one point. If you look at gold stocks and particularly juniors, you would think that the gold price is up. That's what you want to see. These juniors are finally catching up to the majors, and the majors are finally catching up to the gold price. So this is all very bullish action, especially when you take a look at the TSX Venture continues to make these 52-week highs, while GDX and GDXJ are consolidating their bullish moves already. So, this is all bullish action. I'm liking it. I'm taking a little profit on some things that have gotten too large in my portfolio, but still holding core positions. But this is all very bullish action.
Well, Dave, just to the point of trimming back some of the winners, we're talking off mic that we think that that's what we're seeing across the board here is people pulling profits and ringing register on some of the bigger producers that have run or the royalty companies that have run and looking further down the food chain, which is what we want to see in any healthy cycle. But in other cycles, they were so short that we saw the producers run in a month or two, and then 2 or 3 months later, they were already going down the food chain. This one took a long time to develop, where we finally have seen some of the money coming down into the smaller producers, the developers, and even some of the advanced explorers. Does that give you hope that maybe this cycle is going to be more stretched out than the prior ones we've seen?
Absolutely, Shad. That's a very good point, because the last two pull legs we had in this sector lasted. The one in January 2016, that began in January 2016 when the gold price bottomed at a little over $1,000. That bull move lasted 6 months. And then the one following, and then it took 3-4 years to consolidate that move. And then the next bull move was right off the spike COVID bottom, and that lasted a little less than 5 months. So, and everything was going up together, like you said. So this has got staying power, because you see that the miners really took off and the juniors continued to lag. But now, like we were talking about before, smart money that got into these miners early are ringing the cash register on some of those profits and rotating down to the higher risk juniors that are still massively undervalued. I'm seeing so many really start to move up now, and like I said last week, so many are breaking out of these huge bases, and they got a long way to run. The bigger the base, the higher its space when you're talking about accumulative bases. And as far as the gold price is concerned, the market's finally beginning to believe that, hey, $3,000 looks like it's going to be the new floor. And look at all these projects. Look at how much money they're going to make if you're a late stage developer, and you say to yourself, wow, this stock is a big takeover candidate. And like we said earlier, it's already happening in the silver space big time. A lot of these single asset producers are being gobbled up by majors and mid tiers.
So let's look ahead here. Do a little strategy session when it comes to the gold price. Gold actually is the same price it was kind of back in mid to late April. It's consolidated in around here, dropped down to a low of a little below 3,200, quickly recovered. Is pretty much $100 to $150 around that $3,300 level. A lot of people are saying that after this very powerful move to start the year, maybe gold would consolidate maybe through summer. What does that look like filtering down to the stocks here, Dave? If gold doesn't go through any massive price appreciation, but doesn't fade. Where does the money go in gold? Does new money come in? Does it keep to rotate down the food chain? How do you see that playing out?
Yeah, I think that's the best case scenario, right? I mean, we saw an 11% correction that happened pretty quickly in the gold price, and now that correction's being consolidated. I mean, that's been the pattern ever since gold broke out of that incredibly bullish 13-year cup and handle pattern. We have these quick downdrafts after huge moves, and the consolidation periods don't last very long. And now what you're seeing is days when the gold price, like today, when the gold price is down quite a bit, yet the stocks and especially the juniors are seeing weakness immediately bought. And some of these juniors aren't even waiting for weakness. They're just continuing to be bought because that's where the value is. So, that's a scenario that I welcome. The gold price consolidating for as long as possible below that isolated high at 3,500, while while the miners play catch up to the gold price and the juniors play catch up to the miners.
Well, Dave, while we're playing catch up, let's bring in silver, the dark horse coming from behind here. It's sitting in the 33 range now, getting kind of comfortable in the lower to mid 30s. Everybody's still waiting for that break above 35 and 37 to test that all-time high around 49 or 50. Even if gold channels sideways through the summer and we have kind of a summer doldrums, could silver still keep catching up?
I believe so. I mean, if you take a look at that huge move down in the silver price, that was basically a false move lower when we had the big downdraft in the stock market. It took silver with it, but we had a really quick bounce back. It was a whipsaw move, and now it's creating a bullish flag, just like the GDX and GDXJ. Because let's face it, GDX and GDXJ and silver have been lagging the gold price for so long, and they're due to catch up, and that's what they're doing. And it looks to me like silver is just building this flag here to finally take on $35 an ounce. And you see what's happening in the silver space with all these mid tiers and these majors gobbling up these single asset producers, these smaller cap single asset producers. They see the writing on the wall. They know that silver is about to break out. They know that in the past silver always lags gold, and it always ends up catching up and has the biggest moves. And they also know that there's not a lot of really high quality silver projects out there. So they're getting on the beam and they're gobbling up these companies for growth, because basically that's what the shareholders, these miners and these majors and these mid tiers and these royalty companies, they're clamoring for. They're clamoring for more growth. These miners and these mid tiers, they've done a great job of having having a healthy balance sheet now. They short up their balance sheets, they're paying dividends, they're buying back stock. So now investors want growth.
Absolutely. Take advantage of these higher metals prices. Growth in the mining sector is hard, though, unless you're taking out a producer at the current state, because building these assets does take some time. And that's why I think, yeah, the more acquisitions we can see, especially of either late stage developers, companies, projects coming online in the very near term or already producing assets, they make a lot of sense, but a lot of those stocks have also been revalued in a sense. That gold silver ratio is still right around 100 too, so we'll see where that goes. But Dave, we've seen this environment before where gold or precious metals, but gold mostly and silver garner a lot of interest from investors, and that's where a lot of the money flows into these underlying stocks. There's also, I would argue, probably the most gold stocks out there compared to other commodities. But we have heard antimony recently. We hear uranium with some of the recent news out of, well, US politics and Trump being more friendly towards that, even out of Canada being more friendly to uranium. Do you see any of these other metals offering some opportunity as, yes, investors rotate money down the food chain in the precious metal stocks, but they are also willing and able to move into other commodity sectors?
Yeah, I definitely see it, but I pretty much like to stick with gold, silver, and copper. Those are the stalwarts, and those are the metals I feel comfortable with. And these flavor of the month metals, some of them, sometimes they can have a big move. We had that huge that lithium craze that lasted for a little while, but then the bottom fell out of that. The uranium sector, which is highly volatile, We had that sector take off for a little while, but I still see the value in gold, silver, and copper as more steady and less risky.
When you look at copper, you've seen some moves in the prior couple of years in the producers, but we were remarking off mic that a lot of the earliest stage companies, the drill plays, haven't really gotten moving yet. But some of the middle ground, the development stage companies, which is kind of the sandbox you play in, Dave, those have gotten some traction. So how are you looking at things like copper developers then compared to gold and silver developers?
Yeah, there's, because what I've been doing lately is looking down the food chain and getting more interested in earlier stage juniors, PEA stage, or pre-mineral resource, pre-PPH stage. So as far as that is concerned, this is where the value is now, and this is where you're seeing a lot of this sector rotation coming into. There's a lot of these stocks are really starting to move, and a couple of them on my watch list have pretty much run away from me. So I don't like to chase, so there's still plenty of others that I'm interested in, but I think that's where the value is now. If you look at these companies, let's say that a company just put out an updated mineral resource, it wowed the market, but hey, look, they need money. But some of these stocks, they're going higher even though the market knows they need money. In the past, before we had this junior breakout and this gold miner breakout, we had strong results posted, and then the market would look at their balance sheet and they say, oh wow, look, they're going to raise money, so we can wait for the raise, we can sell the stock short even and get it at a better price, get a warrant, yada yada yada, and we can sit on the stock. But that's not happening now. I'm seeing a couple of these companies that they put out these updated mineral resource updates, or they put out a fantastic PEA. You look at their balance sheet; they've only got a couple $1 million left, but it doesn't matter. The market is still buying it because they see the quality of the project. They might see, hey, this company has access to capital, or hey, this company has raised in the past without having to attach a warrant. So that shows me that this project is quality. I don't mind buying early before the raise because they're going to raise money and they're not going to offer a warrant anyway.
Well, we're seeing a lot of money being raised, something I've noted in the last couple of weeks and even today, going through the news releases from junior companies, either closed or announced or upsized. We saw about 25 plus million dollars just today with companies market caps sub 20, $30 million. So look, money is available. It's being raised. But Dave, there's still quite a few copper companies out there, juniors with resources, with economics. Sometimes these economics just look so similar to each other. So, what have you noticed? Which are the ones that are running? Because there are a number of stocks that are quite similar when you just look at either resource size or economics, early stage economics.
Yeah, the ones that are running are the ones, like I said, it looks like it's a quality asset. The economic numbers look very good at metals prices where they even lower than where they are.
What do you consider good? Sorry to interrupt, but what do you consider good? What do you consider a resource of
Well,
quality?
if it's high margin, if the study was done 1450, 1500 gold, or even 1700 gold, that's happening now where they're raising it to 1700, right around there, and the metals price is double that. So as far as economics is concerned, the market is pricing in, hey, it looks like gold is going to have a $3,000 floor here. So I'm going to start factoring in higher metals prices, even though the economic study was done at a lower price. And a lot of these companies, when they release these economic studies, they put higher prices. What do the numbers look like at higher prices? So that always helps also. So that's what you look at. And also you want to look at the market cap and how much they're going to need to raise for the initial capex of the project. Do they have a strategic partner with that access to capital? And like I said, have they raised in the past without having to attach a warrant?
Dave, when we see all these companies raising money, should we also have a double-edged sword where, yes, it's good that the sector is doing well and that while the metals prices are higher, we're seeing companies raising money, but it also means you're spreading the investor focus across about 1,000 gold companies. And if we bring silver in another 200, or we bring copper in another 200, so you've got 14 to 1,600 companies here, all waving their arms saying, fund us, fund us. When they all get funding, isn't that the sector shooting itself in the foot in a sense?
Oh, when they if they all start getting funding, yes. I mean, that's where you have to sharpen your pencil and you have to do your due diligence and you make sure you want to get into the companies that you want to hold for the duration here. Now that we're in a bull market in the junior sector. So yeah, I mean, there's still a lot of those lifestyle juniors are still around. Not many of them went by the wayside. So you have to be very careful on which ones you get into. You know, as Rick Rule says, and wholeheartedly agree. 85% of these companies are worthless and they mine investors more than they mine metal. So you really have to be on the lookout and make sure you get in the right companies.
Yeah, we'll leave it there, Dave, because right now there is a lot of money being raised, and I would argue some of that money is going into these much lower quality companies. This is a very frothy market. We have seen this before. This has all the signs of a bull market. Pretty much every single box is being ticked, if you ask me, in terms of a bull market. And now it's just about having a sustainable bull market here, not just a quick move, but with metals prices where they are and gold especially, what it has done, there is room still for this market to perform well because of, well, just how much higher we have in terms of metals prices. But yeah, you still need to be selective, even though I'm sure some of the even lower quality companies, they are moving higher too. So good time to be invested, but also just be aware that, man, things are real good right now, which is positive for all of us who've waited quite a while for that. Again, we're chatting with Dave Erfle, founder and editor of the Junior Miner Junky. Dave, always great chatting with you. Thanks for your time today.
Same here, guys. Thanks a lot.